Here in this video, we are going to ask a very simple question. Are we in a bubble? More specifically, are AI stocks in a bubble, and when could this bubble burst? After all, nobody thinks they're in a bubble until you're in a bubble. And really, a bubble comes down to expectations. Are expectations too high? That typically leads to bubbles. Even if these companies are great, if expectations are too high, well, that's a problem, and that is a bubble by definition. Listen to this. According to one Wall Street analyst, ARM stock has 26% downside. But listen to the way that they even value this company. It's insane. If you were to value any other company like this, you would be laughed at. Okay? Fergu, that is the analyst with New Street that just essentially downgraded the stock. He says in fiscal year 2028, so looking out 4 years from now, New Street is modeling for ARM to generate earnings before interest and taxes, EBIT, of $3.8 billion, which the firm suggests is roughly 5% above analyst consensus estimates. With that as a backdrop, the analyst argues that even with a generous 40 times multiple on our above consensus expectations, he can't justify buying ARM stock at any price above $110 per share. That just sounds crazy. I mean, trying to justify a company's current multiple by just extending out the timeline from a year to 2 years to 3 years to 4 years? That sounds like a bubble, or trying to justify one at the very least. Now, I've been very clear here on this channel. ARM stock specifically is a bubble. Okay, there's 1.03 billion shares of ARM stock outstanding, but 929.7 million shares of which are currently owned by SoftBank and are unable to be sold until March 12th. So what happened? I mean, ARM had decent earnings and the stock went parabolic because there's only 94 million shares out there, and you have this AI opium that is out there in the marketplace. Simple supply and demand logic would say ARM stock is going higher, and that's exactly what happened. After, well, March 12th, that's a very different story. ARM has average volume since it's IPO'd of about 15 million shares a day. Now, just to put this into a little bit of context, if SoftBank wanted to sell 1% of their ARM stake every single day, that would be 9.3 million shares. If you've seen average volume of 15 million shares buying and selling, and ARM were to come in and start selling a fraction of even maybe a fraction of their position, 1% a day, you would be at 9.3 million shares out of 15 million for total trading volume. You would see a collapse of ARM stock just based on this metric alone. If you divide this by 2, let's just say ARM sells half of 1% of their position every day, that would still be almost 4.7 million shares of ARM that would be getting sold by SoftBank. Now, a lot of people, I've heard this backlash that ARM or SoftBank is not going to sell ARM, and I think that's absolutely crazy. I think that's a crazier assumption than anything else, because SoftBank bought ARM for $32 billion in 2016. They tried to sell ARM to Nvidia for $40 billion in 2022. Now today, guess what their position is worth? 929.7 million shares. Times the current share price of about $142 per share, their position is worth $132 billion. You don't think they're going to sell anything at all? Now, this, you could be looking at hundreds of percents of dilution. That means you could just see a lot more shares starting to trade hands. And I mean, that's not going to end well. I mean, the entire SoftBank ARM position is worth more than SoftBank as a company. SoftBank as a company is only worth about $85 billion. So their ARM position is worth what, 55 billion more than the entire company of SoftBank. If that ever happens, just know that's never going to end well. Now, Nvidia has really been the godfather, if you will, as some people will say, of AI. And for the most part, their valuation makes a little bit more sense. Nvidia's price to earnings PE multiple is 65.60. Now, this could actually go much lower than that. Some people think this could be, 30, 35 over the next 12 months. And that could happen. I mean, there is a lot of demand for Nvidia's products for their GPUs, but it's kind of like if you buy a computer. You're not going to go out and buy a new computer every year, at least not the vast majority of computer buyers. So as these companies, they take delivery of their GPUs, they set up their operations. Sure, are they going to periodically have to buy more? Of course. But what you've really seen lately is Nvidia has been able to raise prices on their H100s, their higher end GPUs. Whereas they're really inflated as far as pricing. Nvidia is currently selling these GPUs for $35,000 a piece. The MSRP pricing on them is about $8,000. So they are, 4, 5x more expensive than they otherwise would have been. And we have seen lead times fall for these GPUs down to about 3 to 4 months. It used to be 12 plus months to get your hands on these GPUs. So presumably, pricing will go down throughout 2024. And whether or not that happens, I don't think is really important for evaluating today if Nvidia or other AI stocks are in a bubble. The thing that really sticks out to me is nobody is even pricing that in as a possibility. Pricing's just going to keep going higher. Demand's going to be as strong as it has been for years to come. And maybe that is true. But what if it's not? There's no kind of push and pull from the bears. You got to own the stock. That's what Wall Street says. And in that scenario, you have so many bulls, people just are afraid to have bearish takes on a stock like Nvidia. You don't want to lose clients, right? Although I'm just some guy that can sit here and tell you pricing's probably going to get cheaper for Nvidia GPUs. That's going to put pressure on revenue. That's going to really make it hard for Nvidia to grow, in which at the rate they're priced for, they have to grow a lot. So I really think the lack of pricing in or accounting for potential downside surprises is what is really making this a bubble right now. If everything goes just as smoothly as expected, Nvidia could be just fine. Maybe it's cheap here if Nvidia continues to beat and raise, beat and raise, beat and raise. But 4 quarters from now, what's the situation going to look like? Are there $35,000 GPUs, $25,000? What does that do to Nvidia's not only pricing power, but margins and overall top-line revenue growth? It's probably not going to be great. Now, coming on March 12th, I think ARM could really start to pop this AI bubble, as you do see these AI stocks trade in sympathy to each other. It's also important to know that SoftBank has made some really bad bets in the past, so they probably want or need to get some of their investment out of ARM as well. They invested a total of $16 billion in now what is bankrupt WeWork. And again, the market cap value of SoftBank, we'll go ahead and pull this up, is $87 billion. So, I mean, when you're taking losses like that, yeah, you gotta make that up some other way. I mean, if market dynamics can tell you if things are great or not, I mean, SoftBank's trading barely higher than they were before the Rona. SoftBank stock is currently at $29.75 before the Rona. SoftBank stock was $25. At the high of 2021, SoftBank stock was about $50 per share. So when you look at it from that perspective, the company's probably not in the greatest overall situation. Again, leading to the point that I'm trying to make of SoftBank's probably going to sell a substantial amount of ARM. After all, if they bought the whole company for $32 billion, they were willing to sell the company for $40 billion, only net $8 billion in profit. And today the value is 130 billion and they can unload as much as they want. I mean, maybe they unload 40 billion worth and that would be them reducing their position by about 30%. Now, if they reduce their position by about 30%, well, yeah, that's going to be a big problem. A 30% reduction in their position would be them selling 278 million shares of ARM. I mean, if you look at all of the volume you have seen so far, that's a substantial portion. I mean, in the whole month of February, that would be about half of the volume alone, almost half of the volume you've seen traded hands so far, just in ARM or SoftBank selling pressure. So that could be huge, and I'm expecting big downside coming after March 12th, maybe in the days leading into that as well. But I think another question we need to answer and really talk about is what kind of effect this is having on the markets, because there's one side to this. There's the AI hype, just Nvidia going higher, Microsoft going higher, Google, Amazon, these big tech stocks that are deemed as AI stocks that have seen a lot of value increase from AI. Let's be honest. Nvidia is 5% of the NASDAQ and the S&P. Microsoft's the largest weighting of the NASDAQ and the S&P. Amazon's 6-7% weighting. Google 6-7% weighting, right? So when their stocks continue to go higher, it puts upside pressure on the markets. And you've basically seen the markets go straight up. Now, of course, Nvidia has somewhat justified what's happened with that stock, but the other guys have not. If you look at SMCI, if you look at ARM, if you look at any of the other guys, they are the ones that are likely truly in some kind of bubble-like period. Now, how much market value has been added to the S&P and the NASDAQ based on AI? That's impossible to calculate, but I would argue it has been a lot, because the other factor of this is people perceive AI will add a lot of productivity to the economy here in the near term. Maybe that's right, maybe that's wrong. Maybe that does help boost the economy at least a little bit, but I think that has gotten way priced in. For a stock like Microsoft, trading with almost a 40 times forward multiple that is growing at 10%, I mean, that's a very expensive company. And you can also look under the surface at something like IWM, the index for the Russell 2000, I mean, not even trading close to its all-time highs. You're still down over 20% from the Russell's all-time highs. So there's really a disparity that's happening here. And if I were to just judge looking at the Russell compared to the S&P 500, I mean, there has been quite a bit of value added to our markets just based on AI alone. And we have no idea where AI will ultimately take the economy, if it will be a big deal or not, add to, GDP and economic activity, or if this is kind of the highest demand that we're going to see for GPUs. We just don't know. So I think this is kind of a bubble of bullish expectations. So what I mean by that is we may get good numbers from Nvidia, SMCI, ARM. We might get good numbers from all of these stocks. I'm sure we probably do. But you're not pricing in the event of bad numbers just based on where the multiples are. There is basically only good news priced into these companies. And when you get bad news, when you get ARM's lockup on March 12th or bad news from the Fed or anything else, that could add a little bit more aggressive selling pressure than maybe what we have seen over the last couple of months. I mean, there is no price discovery. There is no volatility in our markets anymore. Stocks just keep going higher. There's also other things to consider, like economic activity and manufacturing that has been negative for 16 months now. This is worse than the great financial crisis. This is back during the dot-com bubble and after the Paul Volcker period of the 70s. I mean, this does not look good. Is this priced into the markets? Not at all, as potentially being a leading indicator of a recession or some kind of weakening economy. Not to mention, delinquency rates among large banks just hit 3%, the highest in 11 years. The delinquency rate among small banks hit 7.8%, the highest on record. Yet, this is having no impact to the markets. The S&P 500 has closed higher in 16 out of the last 18 weeks. That hasn't happened since 1971. Given the risks out there, I think this is way too bullish for, what we're actually faced with. And that is a Fed that has raised rates very aggressively, as an economy that is going to presumably start feeling some of these interest rate hikes, and already bad data. I mean, we just looked at the bad data. There's plenty more where that comes from, and there's no pricing in of risk here at all. When there is such a disregard for any opposite price action, that never ends well. What I mean by that is when stocks are going straight up, disregarding any potential downside risks, that usually ends poorly. When stocks are going straight down, excluding any potential upside positive surprises, that usually ends poorly for the bears. The S&P 500 was up in January and in February of 2024, historically up close to 20% on average for the year when this happens. Now, this is a true statistic, but when you look at this, you're going to sit here and say stocks are just going to go straight up because that's what it looks like. No, that's usually not how things go. Typically during an election year specifically, you get some weakness here around March, and then stocks do okay in the late second quarter. Third quarter, they start to decline towards the election, and then markets really start to take off after the election. But I think the biggest question of all, whether or not stocks will ultimately do well, or if this bubble comes collapsing, it really comes down to a recession and what inflation does. If inflation rises from here and we go through another smaller round of inflationary problems, stocks are going to fall, and they could fall huge. If we go into a recession, stocks will fall huge. If we avoid those things, then I think we do get a corrective phase for AI stocks. Because think about it like this as well. Besides like a Microsoft Copilot AI, which is a very small portion of their revenue anyways, or, like a Palantir or some kind of company like that, nobody's really experiencing AI revenues, right? It's all Nvidia. It's all the hardware right now. If we're going to expect Nvidia and hardware AI providers like GPU providers, server rack providers like SMCI, chip, suppliers and designers like ARM are going to do well for years to come, you're going to need to see companies bringing in some real AI dollar hollers. If these companies are not bringing in AI dollar hollers, the investment will stop or slow down. That's the fact of the matter. I think that's also another thing that gets widely, mislooked. Nobody's expecting much from, all these other companies that are actually buying the GPUs. Like, what are people's actual expectations for Meta buying all these GPUs or Amazon buying all these GPUs? Not much. There's not a lot of huge expectations there to generate more revenue. That needs to happen. Or I don't understand the multi-year investment thesis looking out at 2028 multiples and trying to justify valuations. That just doesn't make sense. Apparently, according to Garzelli, he says the money supply is a leading indicator of inflation and has fallen from 27.0% in 2021 to negative 2% year over year. This suggests continued disinflation over the next 6 to 12 months, and we believe the Fed's 2% target will soon arrive. If that happens, that could be great news, and we ultimately do go into a soft landing kind of scenario. Now, something else I think is also important to consider is your AI stocks like Nvidia and all of these other guys. If we theoretically were to go into a recession, that's not a terrible area to be invested in. Just like kind of big tech, right? A Microsoft might be a little bit more or less, I should say, sensitive to the economy compared to a manufacturing company, compared to an auto company, or some other company that is sensitive to the economy, right? Because you're dealing with Meta, Amazon, Apple, these large companies that are buying your products, Nvidia, right? Most of Nvidia's revenue is coming from other big tech companies. So with that being said, maybe the growth could hold up better in some kind of recessionary like event. Now, I think it's probably more likely we don't have a recession or we don't have a deep recession. In that scenario, if we do have this soft landing that is market consensus, and we do start to get that $6.2 trillion in money market funds coming back into our markets, where is that money going to go? It's going to go into interest rate sensitive names, into your quote unquote catch up trade. And that's again where I think some of the air could come out of this bubble as well. So just to recap here, I think the over exuberance of these AI stocks is certainly bubble-like. There's no perceived downside that could come to these stocks. There's no downside surprises that are priced into these stocks. And when you have to go out multiple years and try to look at 4 or 5 years down the line what EPS could look like to try to justify stock prices today, that means multi-years of good news is likely priced into these stocks. And to the same kind of argument that the bulls will have in AI, if we do actually avoid a recession, well, I don't see the scenario where Nvidia and SMCI and ARM and these other AI stocks continue to get bought up the way that they have. The trade at that point, if we do have a soft landing and rates come down, is likely by interest rate sensitive companies, because they should be the ones at that point experiencing the accelerated growth, less chance of bankruptcy, easier cost of capital. Plenty of reasons why you would see the interest rate sensitive names do better if rates were to fall. It's pretty straightforward. It's literally in what I just said. And I do think here over the next 2 weeks, we do have a big test with the ARM lockup period. If SoftBank is willing to sell a ton of ARM and send the stock lower, then I think that's going to be a sign for some people that they should also start taking some profits. We also have big events coming next week, and we will talk about those, well, tomorrow. So stay tuned to the channel, hit that like button, and subscribe to the channel so you don't miss that video. We have Jerome Powell coming next week. We have non-farm payrolls, ISM services data, ADP employment change, all kinds of different things. And yeah, it's going to be a jam-packed one tomorrow. Thank you for watching, ladies and gentlemen. Provide your opinions down below in the comment section. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.